Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is May the 20th, 2025. And let's take a look at Chicago wheat futures. And I changed up my trend lines here. Usually I draw them in yellow, but for some reason I changed them up to red and blue. And I actually changed the bottom trend line. So you may recall I had a trend line going here, this bottom horizontal trend line at 525. And if I got a close below 525, then I would start to become bearish. Well, we got the close here 3 weeks ago. We closed at 520 on the weekly chart, close at 520. So what I've done here is I've changed my trend line. I've more horizontal, and in large part due to the last week's candlestick, this some kind of doji candle. I'm not a candlestick guy, but I'm sure there's somebody who can tell me what that is. But I'm not a real candlestick guy. But what I did talk to you a couple weeks ago was we have this descending triangle, which for me is a real bearish chart pattern. I love descending triangles. I love playing a breakdown below a descending triangle. Now the thing is, as we get closer to the apex, the risk of a breakdown is severely reduced. So once we get past 70% of the way to the apex, then the conviction that we have a breakdown is certainly reduced, so we can often see a rally from there. So we're seeing that right now, perhaps. We're finding support from that 520, 525 level. And we're still below the screen 50-week moving average. But, I mean, it's a pretty good start to the week. And I think we can see a rally from here. I've been expecting a rally in wheat since last fall, and we haven't got the rally that I've been expecting. So was I early? Was I wrong? Was I both early and wrong? Well, probably, right? But nonetheless, after the start of this week here and last week's candle gives me some hope that we will see that rally. But right now, it's kind of a no trade zone for me. I don't see much opportunity below this declining, a much opportunity for a long position below this declining 50-week moving average. Here's the daily chart, and we have a purple 200-day moving average overhead, and you know what they say, don't expect nothing good to happen below a 200-day moving average. We're trading here today, we're trading above this green 50-day moving average. It's still declining, so it's hard to get too excited. We're going to get pinched in between these two moving averages, it looks like, which, maybe that can give us enough energy to rally higher. We have some previous resistance here. It's likely going to take a bit of effort, a bit of time to get back above this 200-day moving average at 557, and we really need to get above 570, 575 before we can become bullish, you might say. So right now we want to keep an eye on this. It's kind of a no trade zone for me on any time frame, unless maybe you want to do some day trading or something, but that's challenging in itself. But yeah, keep an eye on these levels. Keep an eye on the 520 level, right? We're trading at 545 as we speak. And keep above 550, 575. And if we get above those prices, then I think we can see a nice rally in Chicago wheat futures. My name is Trent Klarenbach, sunny in Saskatoon. Life's good.